I guess my core question with all of this is always, we all know we have a challenge, and time after time I've sat in sessions like this and everybody has said we need to educate, we need to train, we need to skill up SMEs, and I mean the session this morning and sessions yesterday as well, how many people actually don't know about UKEF, don't know about UK export financing, whether, and you know, it's not just a UK problem, it's a global problem, that this sort of element of going to the right place to get finance and understanding that whole process is huge. I mean, years ago I studied venture capital and I wrote about venture capital. I spoke to venture capitalists and they used to say there's tons of money around, of course we finance all of this, we just haven't got the deal flow. In other words, companies aren't coming through. And I think on the venture capital side you still see that gap there, you still see that problem, which is that SMEs are reluctant to go because they think they're going to fail or because they just don't know what to do. So Francisca, where are we going to take this? How are we going to educate our SMEs? I mean, banks aren't necessarily in the business of education. They're in the business of providing finance. So, and yet there seems to be this move towards a more sort of trade finance in the round type offer. So how can you make that viable?
Yeah, I think there's two elements to it. You have on the one end the customers that you say need to be educated potentially, but on the other end there's the banks that go through a tremendous development to make sure that today's and the future proposition to the SME market from a trade finance perspective, or be it from another banking solution perspective, is fit for purpose in today's environment. We have an enormous amount of data within banks, be it sector, be it country, anything you can think of. Even after the financial crisis, there is a significant level of trust in the financial network still, and that's because we've also learned from the financial crisis. We have processes in place for probably everything from compliance to financial controls to know your customer. So we are also evolving. What you've seen over, let's say, the last 10 years is that some fintechs have come with trade finance and working capital propositions, but they are very transactional focused. And I think where Jim and I play, working more for, call it the incumbents in the UK, the more traditional banks, we're very much focused on the overall relationship. So we offer trade finance, but we also offer transactional banking or foreign exchange. But with that relationship focus, we'll need to make sure that we are still lean, or we become leaner and very agile. So I think it is on the one side, we need to educate our customers. We're talking about the SME market, so we shouldn't expect the same level of analysis that we're doing for a multinational, where we're lending hundreds of millions potentially. So it's that balance. And when you look at your call-it scorecard, Rebecca, or monitoring tool, what data can we extract from publicly available resources? What level of information and what detail do we really require to make that decision around working capital? And as Jim says it, it's the three elements you highlighted, Jim: working capital, can the company conform, and will they be paid? And what kind of solution from a banking perspective do we then need to offer the SME? Because if you ask the SME from a working capital perspective, they probably like us to write a checkbook or provide them with an overdraft. We, as banks, we try to mitigate the risk, but there is a middle ground, and the middle ground is easier to be achieved when we appropriately use the data. And I think from a banking perspective, where banks are focusing on the relationship, and it's not a one-dimensional solution. We are improving our time to money. We are using more of that data. We're slowly implementing digital solutions, and tools, Rebecca, that you are building, can potentially integrate and help both sides.
I think that's really interesting. Certainly, I mean, Jim, I'll bring you in, but again, I'm shamefully abusing Chairman's power here by answering some of the questions, because I think there's some very important questions there that you're raising, which are particularly around the use of data. So, I mean, there's publicly available data. The monitoring tool has the names of companies behind it, so we know the names of companies behind that monitoring tool. We know where they are. We know who they are. We can geolocate them. We know what their turnovers are, we know what their employment structures are, and because of the mechanisms that we've created to create that tool, we also know that they're exporters, and that's the important thing. So I mean, one important piece of sort of market sizing almost that has been very difficult to do, we've done with this exercise, which is to market size and find out that those companies actually are exporters. Now that's something that becomes useful, but I know that the $1 trillion literally question for banks is about the transaction. So it's not just about whether or not a company is exporting, it's about where it's exporting to, what the size of the market is where it's exporting, how safe that transaction is, and to your point, will we get paid? So unpacking some of that, collaboration actually critically has to be on the data side of things, as well as on the sort of understanding each other's needs and requirements side. And I think there's technology there to do that. So Jim, I'd come to you and say, it's actually more about the way in which we share data and the technology to share data. I mean, you mentioned some of the blockchain solutions out there, but it still means that there's not a great transparency on the level of data accessibility, is there? I mean, if we're going to try and get to that data problem, then we all need to start sharing our data a little bit more.
Yeah, no, absolutely right, Rebecca. And I think there are a number of sort of strands here. I think firstly, I think your initial question was, how do we go about this? Well, I think we've got to make it as simple as possible. And for me, making it as simple as possible means we have to take trade into a digital world, okay? Whether that be digital transactions or whether that be data, okay? We cannot continue with this sort of paper-based world of moving documents around the world, all the working capital that is tied up, within those trading cycles. And depending on what survey you believe, it's probably $1.5 to $2.5 trillion, tied up in working capital cycles. So firstly, there's that digitization piece. And the reason that's important from a bank's perspective, and the reason that we've been looking, particularly interested in distributed ledger technology solutions, is banks need to have visibility over what they are funding and certainty over what they are funding, and so a digital world with undisputed facts, which is what you get on distributed ledger technology, has to be a fundamental part of that as we move forward. Okay, and then, as you say, Rebecca, data that actually sits behind that and drives the understanding of that. Okay, if I bring it back to a slightly more fundamental, sort of level, this is also about early engagement, banks and customers coming to talk to their banks at a very early stage in a potential opportunity, to understand, exactly, what a bank is going to need, and to be able to see and data that it will need to help finance that transaction. So early engagement, is absolutely critical here as well, I think, Rebecca. And to be honest, we're probably not very good at that as a trade finance industry. Customers tend to come to banks when a contract's been signed and say, can you finance this for me, please? And banks are not proactive with their customers either, necessarily on sort of that proactive discussion about where are you taking your business and what markets are you going into.
It's something of that, and I'd say to the audience as well, do chime in. Anybody who's listening, do chime in with chat questions or jump in and just put yourself off mute and say something. Absolutely fine to join in. But I mean, I guess I'm thinking to myself, well, engaging SMEs at an early stage isn't just a bank problem, is it? It's a problem of making companies realise that they've got support organisations like chambers of commerce, like the Federation of Small Business, and obviously the British Business Bank and UKEF, who are there to help provide products to enable companies to scale internationally. So it's actually about banks understanding the relationship with the government and understanding the relationship with the companies as well. So there's a big policy element within all of that as well, isn't there?
And Rebecca, you're absolutely right there. And so from an education perspective, DIT, UKEF, and other government agencies have a role to play, I think, in supporting SMEs from an education perspective, because banks can't do it all. But equally, and I think you mentioned sort of UKEF support. UKEF have been out there supporting UK exporters for many years now. We have the bonds. We currently have the bond support scheme, and we have the working capital schemes, which are excellent. But of course, UKEF are now coming together with the banks with the GEF scheme, the General Export Finance Scheme, which is just on the point of going live, as we speak in the next probably month or so. And so I think a really important development there as well, from that sort of government support perspective, and UKEF's obviously open statement, that a UK export will not go unfunded.
Which is a brave statement. Sorry, David. Yes.
Yeah, I was going to say, I work within Santander. I work in the international team. Very similar to Francisca. I've dealt with the large corporate clients. I've dealt with mid-market. My current role is dealing with the SME market. And I think it's really true to say that I would have more challenging conversations with an SME business than what I would have with a large corporate or a mid-market client, because the larger clients will tend to have people within their organization that have either done it before or they've got succession planning, and they really have a full understanding of what is required. With SME businesses, they've tended not to have been exposed to that type of expertise. And what I am finding is, certainly within the trade finance market, that there's a reduced number of practitioners than what there was maybe 5-10 years ago. So on the education piece, it's more difficult for SMEs to find, who do I speak to? Because sometimes they by default, they'll come to the bank. By default, they may go to DIT. By default, they may go to UK Export Finance just because they've Googled something. But I guess it's how do we get the message out to the SME market that the UK is open for business when it comes to trade finance? And that's the moot point for me is, Jim will have, his guys who want to write trade finance business. I want to write more business. Francesca wants to write more business. We all do, but how do we do it? And digital for me has to be the way to go. Jim made a really, really good point is, traditionally banks, we like our original bills of lading. We like our documents. We facilitate the transaction by moving the documents. That's probably the dim and distant past. We need to evolve into providing, very similar to what the fintechs are doing, really slick processes and solutions where the time to money is very, very quick, but the proposition meets bank requirements, because that tends to be the bottom line.
So I think you've raised a lot of points there, and I think it's super interesting because this whole point about making the money move quickly, and making the money get to the right place quickly. We were talking about it in the supply chain context yesterday, talking about it today, and again, it's something that is really important, particularly in the current climate, because it is an area where banks are being disintermediated, isn't it, by the big tech companies, not necessarily by fintech, but by actually the Googles and the Amazons. Google globalization. I mean, it's a very real thing. The other thing you're saying is, how do you get the information to SMEs when they don't have, forgive me, a team of economists behind them to be giving them the strategies and everything? Now that process of data and data aggregation can be done automatically. I mean, the sort of information that you need to build a business plan is out there, and it can be synthesized, and to some extent Coriolis is doing that with its multilateral open trade product. But I think then the question is, yes, but SMEs don't necessarily have the skills to be able even to use that data, and it's about bringing those two things together. I think the third thing you said was really important, is actually everything is changing. It's got to be technological. SMEs actually would not be at all bothered. We've been through the making tax digital process. SMEs wouldn't be at all bothered by having technological solutions to letters of credit, e-letters of credit, or e-bills of lading, e-promissory notes. It's something that actually SMEs will probably be quite comfortable with. But introducing all of those is a massively costly and time-consuming process, isn't it?
Yeah,
and Rebecca, I mean,
they also have to
go on, Francisca. Go on.
Yeah, and that takes time, but I do think that when we start to digitalize solutions at banks, we also start to standardize, and we make it more visible to the SMEs what is required, how decisions are made to get to the right outcome. So I think when we start to digitalize, that education of SMEs will automatically happen for part, and there will hopefully therefore be less of a requirement for the IT, UK expert finance, or traditional sales force to explain, but more to serve and really go straight to the solution. So I do think, and it's very important for the SME market, because we don't want to spend months and months structuring a 1 million facility. We need to be having solutions tailored for the SME market. When we digitalize it, we facilitate, we simplify, and it's not to say that the risk profile will increase, because we will use the data to make the right risk analysis, but it's more focused on artificial intelligence than on traditional risk underwriting processes. But that will take time, and it's also a cultural change within banks that is happening. Sorry,
you wanted to come in.
Yeah, Rebecca, I've actually just seen the question, which I'll just come to in a sec. But what I was just going to say just now was, I am a massive proponent of, digital is the way forward, and digital solutions are the way forward. But what I would say is, don't forget the basics either. Because I've been on a number of these types of sessions over the last few months, and it's been really interesting listening to corporates across the whole spectrum, from large corporates down to your SME type clients, who are actually very concerned about the strength of the counterparties that they are dealing with, and probably have historically been dealing with for years. And what is their real financial position now? I've heard a number of companies talk, very recently about, 12 months ago, I'd have been trading with somebody for 5 years, and I was completely relaxed trading with them on open account terms. Now that same counterparty, following, everything that's happened through COVID, what is their true financial position? And is my risk profile, payment risk profile, what it was 12 months ago, or is it very different? So, for me, that's a really, really key and critical part of how the UK economy comes out of where we are, and how UK companies come out of where we are and move forward. Don't forget the basic principles of Who's my counterparty? What's their risk profile? And how do I mitigate either potentially quality issues, but certainly payment risk protection? So I just wanted to cover that. There is a question. Do you want to come in, Rebecca, before I go to the question?
I'll just come very quickly in with a comment, not a question. A comment, not a question. But I think my comment will be yes. And if you look at the monitoring numbers that we've just put up, what that tells us is that companies are becoming smaller potentially, particularly at the smaller end of the market. So you have seen a drop in profitability this year. You have seen a drop in revenues this year. So the companies that were perhaps medium-sized companies have slipped down into the small company ranking. So your point about counterparty risk is actually, that's going to be a problem globally. That's not just going to be a problem in the UK. So in terms of export finance, if everybody's revenue is falling back, that means that there's actually a bigger issue out there, because suddenly the bigger companies even aren't as big as they used to be. Anyway, you were going to answer the question on...
So I'll just read the question out, actually. It's a question about distributed ledgers. There are already some distributed ledger platforms available for trade finance, developed by the biggest financial institutions. Why do you think the trade transactions are not increasing exponentially through those platforms? Very good question. Actually, quite a deep question. As I said at the outset, certainly, NatWest was one of the founding banks of Voltron, which is now Contour. I sat around that table for 2.5 years as we built out Voltron Contour, and we were a founding member of Marco Polo as well. I think there are a number of factors to that. Firstly, it's about the fintechs and the companies themselves. Okay, so actually, they are in this to make money, and naturally they make their money by going after the biggest wallet share available first. Okay, because they have shareholders, they have investors. So very typically, these types of solutions will, in the early stages, focus on the global trading companies, the multinational corporates. Where's the wallet share that solution can go after? Okay, so that's one challenge. I think another challenge, and this is particularly relevant when you start to look at, digital letters of credit, which Contour is looking at. A lot of the stuff that the Marco Polo guys are trying to do as well, is law and regulation is lagging, the digital innovation. And by that, I mean, you have very simple things like bills of lading, bills of exchange, which are negotiable instruments. And really, to have a true digital end-to-end solution and take up, you need to be able to transfer the title of those very quickly as you go through the transaction. And most law around the world, this isn't just a problem for the UK, most law around the world does not recognise digital negotiation of bills of lading and bills of exchange. And Rebecca, you and I and a number of other banks with the ICC in the UK are now doing a lot of work with UK government as to how we change law, certainly in the UK, to recognise digital transfer. There's a lot of work going on with the Singapore government at the moment in Singapore. The Singapore government are very, very open and very, very committed to digital trade. And there are a number of, I think, examples of that going on around the world as well. So, Rebecca, I don't know whether you want to come in there very briefly on the work that you're leading for us on that, for the ICC and the banks on how we move the old world along with the digital world.
Sure. I mean, I think I will do, because I think it's a very important aspect of changing this market and making it more accessible and more affordable for SMEs as well. So the scope of the work is to understand and actually produce a magic number. It won't be 42, I promise, but a proportion of GDP that's going to be enhanced by having these processes streamlined, automated, and turned into electronic bills of lading, electronic promissory notes. And the reason for doing that is because at the moment, as we've been discussing for the last half hour, it's very expensive for banks to capture an SME market if everything is manual. It's very expensive for SMEs to get involved, but it's also going to save a lot of money, reduce a large amount of the risk in the market. And so it's absolutely about how we streamline all of these processes and how we make them digital over a period of time, so that we can address the issues and actually hopefully increase trade, increase the frequency of trade as well. So to the question about why aren't we seeing this increase exponentially, it's because at the moment, as Jim says, the regulations aren't there, the law isn't there to make it compulsory. As soon as the law makes it mandatory that you have to use an electronic bill of lading, or that you can use it by preference to a manual one, then it'll speed up the process. Francisca, does that tally in with what you're trying to say? And I know Jeff's got a couple of questions as well to come in with.
It does, and I think you know, when you refer to a bill of exchange and transferable negotiable instrument, you have three parties normally. You have the buyer, the supplier, and the bank. That is relatively simple, but if you think about trade finance, you have much more complex, but not necessarily more complex instruments, but where there are more counterparties involved. And I'm not extremely close to the discussions that you are, Rebecca or Jim, you potentially around, you know, the law and changing that. But if you look at other initiatives outside of banking, we've seen it changing. These are potentially less complex because they're more domestically focused, and if we're thinking about trade, it's the international and the cross-border. But I do think there's absolutely the realization, but also the slow change that we'll see to make this happen.
Yeah, and Rebecca, just before we bring Jeff in with a couple of questions, I mean, the reason for me why this is absolutely critical is, a couple of years ago, the Asian Development Bank were estimating that the working capital gap globally was about $1.8 trillion. If you believe recent surveys, that's potentially grown to $4.5 trillion dollars. Sorry, in the context of the COVID crisis and what's happened. And so, we've got to solutionize this stuff, because that's the only way that we are going to start to fund that working capital gap and bridge that working capital gap. It's absolutely critical. Sorry, Jeff, I know you want to come in.
Well, I'm going to jump in before Jeff jumps in, because I think the other thing that the Asian Development Bank will be arguing through all of that is that there is a challenge with emerging markets as well. So I mean, all of this documentation, all of the things that we've put into our own questionnaire and our own tool, they go so far in terms of understanding the market and facilitating the market in developed countries. But honestly, some of the things that are required to be able to do trade finance, say in rural Africa or rural Malaysia or something like that, it's very, very, very difficult indeed to get that level of documentation, that frequency of information, that frequency of updating. So this is a global process. By definition, trade is international and global. And so we need to understand that we need to apply common standards across the world, but that some countries are going to find it a lot more difficult to do that. Jeff, sorry, we interrupted.
No worries. I've got a question. First question is going to test Jim's glass half full mantra that he mentioned earlier.
Nothing will test that.
Which is bearing in mind, obviously, earlier this year you had a lot of government support packages sort of march to May, particularly in the UK, but I guess globally that was the case as well. But borrowers were allowed to defer repayments on bank loans as well, with the hope that cash flow would improve. As people seem to think that cash flow for a lot of SMEs is still a massive issue, there's talk that banks will start asking for repayments, from early next year. So how prepared are banks for things to potentially get worse when it comes to SMEs in that regard, in terms of financing and liquidity and those sort of challenges?
Okay, very, very, very interesting question. And look, I have to be glass half full. I support Ipswich Town, as so does Rebecca. So we have to be naturally glass half full people.
Absolutely, nothing else possible.
There's nothing else. But look, from a bank's perspective, how would I prefer to fund, a customer's working capital? it would be with trade finance facilities and trade finance structures, because I have visibility over what I am funding. I can understand that, I can see it, and I can mold my funding, you know, to that underlying trading cycle and the working capital that requires. So yes, you know, inevitably, you know, you will start to see bibbles, sibbles, and other forms of finance that have been there, you know, need to be repaid. But the way, to me, the way that we should start to finance those is really the Asian model, which has always looked at trade finance as the way of providing working capital to a company. And so for me, you know, in Europe, we hadn't been as good at that. You know, we've been very good with overdrafts over the years, very, very good. But I think we need to start changing our thinking a little bit and providing working capital finance to our customers, you know, more aligned to their underlying trading cycle, and using trade finance and trade instruments as a way of doing that. Whether historical trade instruments like letters of credit, et cetera, or the new world as we go into, you know, digital letters of credit, you know, potentially payment commitments, you know, all that type of stuff.
Francisca, how's that play with you? Yeah.
Yeah, I think I do agree with you, Jim, and what you've seen over the last few months is obviously government support coming in with overdraft term loans, but from a trade perspective, banks have been very flexible and supporting as well to tailor the working capital solutions to make sure those clients were supported, where debtors took a little bit longer to pay, or shipment took a little bit longer to arrive in the UK. That will not change, and that's the beauty of trade finance. We can adapt to really follow the supply chain. What I do think is also really well timed, and Jeff, Jim, you referred to it already, is the general export facility from UK Export Finance that hopefully comes in the next month or so, which is really to encourage UK clients to export and to share part of that risk by UKF's guarantee, to share that risk with banks and really support domestic clients that want to export for the first time or have won a significant contract in a potentially uncertain environment, because no doubt 2021 will be uncertain as well, but that we do support our domestic clients going internationally. And from a bank's perspective, we really don't like the development of UK companies withdrawing from the international market, because if you're internationally, it's a risk mitigant. I won't go into Brexit again, but it is good if you have diversified your exposure from a sector perspective, from an international perspective. So I do think, Jeff, that your challenge around it will be difficult next year is absolutely right. But I do think if we can support anywhere, it's around tailored solutions, which is what trade is about.
Jeff, do you want to come back in?
Yeah, well, there's a second question, I suppose, which was a completely different subject, actually, which is with the use of factoring invoice discounting for SMEs, and whether you predict an increase in that. And do you think that means a greater role for alternative providers as SMEs turn to sort of using those as opposed to impacting on their core bank relationships and liquidity?
It's interesting, actually, because if you look at every recession, I think, well, certainly the last 3 recessions, trade finance and invoice discounting factoring are always counter-cyclical to the recession. So, and that's no surprise, because financiers want to be able to have certainty over what they're funding, and factoring, invoice discounting, and trade finance gives you that. So, yeah, I mean, do I see invoice discounting growing over the next 12 months? Yes, I do, because it always does as you work through a recession and come out of a recession.
I think I'd also jump in there before Francisca does and say that the invoice financing and factoring is it's certainly a more flexible way of accessing finance. It's a potential where banks can get disintermediated unless they already have strong presence in those markets. But most importantly of all, it doesn't require from a non-bank the same level of compliance. So it's actually where it's actually easier for an SME to get finance potentially. So there are big risks attached to it from an SME perspective, because although it is potentially a solution, and if it has proper guarantees or proper insurance against it, then it's fine. But there are huge risks attached to it, because it's actually a very expensive way of financing from an SME perspective, unless it's wrapped into something else. And I'd say we are likely to see it increase because it is a more flexible way. And while there are all those uncertainties out there globally at the moment, it means that while the market is uncertain, people will go to wherever they can get money quickly, which is back to Francisca's point about getting the money to the person that needs it or the business that needs it as quickly as possible.
Yeah, and look, as a trade finance banker, what do I want to do? I want to fund the pre-shipment period, the shipment period, and the production process, and then potentially back off that funding into an invoice financing solution. Yeah, that's what I want to do.
Yeah,
certainly in the SME market, what we just need to bear in mind is the mid-market businesses and the larger businesses, they were once SMEs, and lots of the clients I've had, they've grown the business using invoice discounting and trade. So I believe that it's a stronger proposition for a bank and even an SME business that if there's an opportunity to use invoice discounting, and there are fees involved with that, we can't get around that. But it's a stronger proposition for all parties. And the analogy I'll make is pantomime horse. Trade finance, the front end of the horse, and invoice discounting, the back end, and they work together. And it's a far, far stronger proposition if a bank is presented with that type of opportunity.
Guys, you heard it here first.
I'm just glad you put me at the front of the horse.
Francisca, bring you back in again. Which end are you, the front or the back end of the pantomime horse? Are you the front end or the back end of the pantomime horse?
Well, I just want to bring one thing to the conversation as well. So, if we're talking about trade finance and invoice discounting, and in any event, the SME want money quickly, it's back to the adaptation we want to make. We make to have a digital solution, but to have quick access to money, and we need to. I think what we need to try to do as banks is make sure you have the fintechs, the alternative lending providers that provide transactional banking at very high rates. You have the large corporates that provide supply chain finance to the SME market, be it in the UK, but also in more challenging markets that you refer to, Rebecca. And these solutions are good. They serve a segment, but they are not the utopia, because they come at a price as well. And I think where I would like to finish, it's the balance. Where do we, as trade finance and as banks, want to play to remain a relationship, a trusted partner, SME benefiting from our network, but also, presented at an acceptable price. At the end, it's risk reward for the client and for the bank.
Thank you very much, Jim. Do you want to come in at the end there, just to summarise from your point of view? And then I'm afraid we'll have to call it a day.
I just go back to my glass half full approach. I just think we have tremendous opportunities going forward now as we start to come out of the perfect storm. And as I said, I think it's all about banks and our customers engaging early, working together, and working out how we can bring the UK economy back to hopefully growth as we go through Q3, Q4 next year.
Fantastic. Jim, Francisca, David as well, Jeff, and to everyone who's joined in with this conversation. Thank you so much for a really stimulating discussion around SME finance. I think it's quite unusual for everyone to be quite so forthright and honest. And, you know, the purpose of these working lunches and the dialogue, the multilateral thinking dialogue that we're starting to set up, is to have these forthright conversations, because we can't collaborate unless we share. And we're not telling anyone any competitive secrets, but we're just saying, actually, it's really important. There are risks out there. We acknowledge there's a problem, and we need to bring these two sides together. I think some of the points on digitisation are extremely well made. Maybe it is a way of accessing, of widening access to SMEs, but let's hope that in the end, Jim's glass half full approach is correct, and of course that Ipswich Town get promoted at the end of the season. Thank you very much. Thank you.
Victory tonight, Rebecca. Victory tonight. We'll be there.
Thank you very much.
Thanks, everyone.
Thank you so much for facilitating this.
Bye-bye now.
Take care. Bye.
Bye-bye.
Bye.